Have you ever wondered what would happen if the American economy just collapsed? What if I told you the secret to that collapse is something you use every single day? The US dollar as we know it is gone. It's not real money anymore. While we've been busy living our lives, every major American bank has secretly switched to a digital currency system. A system controlled not by the government, but by a handful of tech billionaires. Think about it. When you use Apple Pay, Google Wallet, or even Amazon, you see dollars on your screen. But what you're actually using are corporate tokens. Digital currency controlled by Silicon Valley programmers who can freeze your account, limit what you buy, and even redistribute your money with a few lines of code. This isn't some far-fetched theory. It's monetary evolution, cleverly disguised as convenience. And the craziest part, we all signed up for it willingly. It started subtly, about 7 years ago, right after the 2019 pandemic. Remember the great cashless conversion? It began as a health measure to avoid physical contact. Businesses stopped taking cash for safety reasons. Soon, those became efficiency reasons, then policy reasons, until finally, it was just a technological impossibility to pay with paper money. The Federal Reserve actually liked it at first. Digital transactions meant better economic data, easier tax collection, and no more printing and securing physical cash. But they missed the real game. They never imagined that these payment apps would become their own private monetary networks, completely separate from traditional banking. Apple was the first to see the power they held. When we all started using Apple Pay, they weren't just collecting data on our spending habits. They realized they could control our spending. They could use payment delays, transaction fees, and security holds to decide when and how we could access our own money. It was brilliant because it was invisible. We saw dollars, but behind the scenes, Apple's algorithms were managing corporate tokens that they could manipulate at will. Of course, Google and Amazon weren't going to be left behind. Google Wallet introduced smart spending features that guided our purchases toward their partners. Amazon Coin, which started as a simple loyalty program, grew into a full-blown payment system, offering discounts if you used their currency instead of dollars. We've traded our financial freedom for convenience, and most of us never even noticed. The question now is, what happens when we can't opt out? Thanks for watching, and if this opened your eyes, make sure to follow for more. Imagine a world where Apple, Google, and Amazon are not just tech giants, but are central banks. This isn't science fiction. It's a future that might be closer than we think. The story begins with a critical breakthrough. Tech companies realizing they could coordinate their own monetary policies, completely bypassing government oversight. Executives started holding secret monthly meetings, calling them payment system optimization sessions. In reality, these were private central banking meetings where corporate algorithms set interest rates, controlled the money supply, and even dictated spending limits for millions of us. How did they get away with it? It was all hidden in the terms of service. Every time you clicked accept on an app update, you were unknowingly agreeing to major monetary policy changes. Suddenly, Apple could cap your daily spending for security. Google could delay your transactions to prevent fraud, and Amazon could block you from buying from their competitors for quality assurance. The true power of this new system became crystal clear during the 2023 inflation crisis. While the Federal Reserve struggled with old-school tactics, tech companies stepped in with immediate, effective solutions. Apple Pay automatically limited how many scarce items you could buy. Google Wallet cleverly steered you toward discounted alternatives. Amazon Coin even subsidized essential items. Their response was faster and more effective than the government ease because it happened right at the point of sale. Prices stabilized for users, and economists were left scratching their heads, wondering why their policies weren't working. But it didn't stop at inflation. Tech companies began to enforce social policies through your wallet. Apple Pay could limit your alcohol purchases based on your Apple Watch health data. Google Wallet could restrict gambling transactions if your search history raised a flag. Amazon Coin could block purchases from companies that didn't meet their environmental standards. They called it social responsibility, but it was a powerful system of behavioral control, shaping society faster than any law ever could. The final nail in the coffin for traditional banking was the 2024 financial crisis. When regional banks started failing, people panicked. But while bank accounts were frozen and credit cards were suspended, tech payment systems worked flawlessly. Your Apple Pay still worked. Your Google Wallet still processed transactions. This crisis proved the undeniable reliability of corporate payment systems, and millions made the switch, leaving traditional banks behind for good. By 2025, the transition was complete. Most people live their financial lives entirely within these tech ecosystems. The Federal Reserve still exists, but its decisions barely make a ripple in an economy now run by corporate algorithms. We gained convenience and stability, but what did we lose in the process? Think about it. Thanks for watching. Hey everyone. Have you ever stopped to think about what money really is today? We see the dollar sign. We tap our phones to pay. But what's happening behind the screen is a massive, silent revolution. This isn't just about better banking. It's a profound shift in who controls our money. For decades, we've welcomed the convenience. Payment apps made life easier with faster transactions, lower fees, and a slicker experience. It felt like an upgrade. But while we were enjoying the improved functionality, something fundamental was changing. We unconsciously handed over monetary sovereignty from democratic institutions to private corporations. We started trusting tech companies with our finances more than traditional banks, thinking of our money less as a government-backed currency and more as just an account balance on an app. The real danger here is the speed and lack of oversight. Traditional monetary policy takes months, involving the Federal Reserve and congressional hearings. Corporate monetary policy? It can be rolled out overnight with a simple software update, influencing millions of people's spending habits instantly. Imagine a tech company deciding to fight climate change. Suddenly, your digital wallet might charge extra for gas or give you discounts for buying eco-friendly products. The goal might be noble, but it happens without a single public debate or vote. This is the reality we live in now. We have the most sophisticated monetary control system in history, but it's hidden behind convenience. Algorithms don't tell you what you can buy. They subtly influence what you want to buy. Software determines the prices you see and the payment options you get. The Federal Reserve building still stands, but the real power over our daily economic lives is increasingly being wielded from Silicon Valley headquarters, based on corporate priorities, not public policy. Sure, this new system is efficient. Transactions are quicker, fraud protection is better, and the apps are easy to use. We prefer it because it offers great customer service. But this efficiency comes at a steep price: our democratic control. The people who now set these powerful monetary policies aren't elected by us and can't be removed by us. We've traded accountability for convenience. It's a critical conversation we need to start having. What does this mean for our future? Let me know your thoughts in the comments below. Thanks for watching, and don't forget to subscribe for more deep dives. What's the most terrifying thing happening to our money right now? It's not inflation, not a stock market crash. It's something so normal, so convenient, that most people don't even see it as a threat. We've given up control over our own money, not through force, but through something far more seductive: superior customer service. Think about it. When was the last time you thought deeply about democratic control over money? For most of us, that's a pretty abstract idea. We never really felt the direct benefits of representation or accountability in our monetary system. But corporate payment systems? We feel their benefits every single day. Faster payments, better fraud protection, tapping your phone to buy coffee, it's just easier. When you have to choose between a vague, abstract concept of democracy and the real, tangible convenience in your hand, which one do you pick? We consistently choose convenience. Tech companies didn't steal this power from the government. They earned it, fair and square, by building better, faster, and more reliable monetary services than our democratic institutions ever could. We voluntarily chose this new system because it just works better for our daily lives. But here's the catch: voluntary surrender is still surrender. Now that we depend on these corporate systems for our everyday economic survival, they hold the power to shape our society based on their priorities, not democratic ones. The Federal Reserve can tweak interest rates, but tech companies can tweak your spending habits in real time. Congress can pass laws, but a corporate algorithm can implement new economic policies instantly. Private companies can change our monetary reality faster than our government can even debate it. And here is the secret that could supposedly collapse the economy. It is not that this corporate control exists. It's that most of us actually prefer it. We would likely resist any attempt to go back to the old way. The so-called digital currency coup is already complete, because the victims that's us chose our new financial leaders. We traded sovereignty for convenience, and honestly, most of us are pretty happy with the deal. We get better customer service from our corporate monetary overlords than we ever did from our elected officials. The economy as we knew it has already been replaced by something more efficient, more convenient, but fundamentally less democratic. And the scariest part, we welcomed it with open arms and a tap of our phones. Thanks for watching, and let me know your thoughts in the comments below. Don't forget to subscribe for more content that makes you think.